Our next speaker is Zachary Manns, and Zach has been with us before, so he's a great presenter. I'm looking forward to hearing him. Let me tell you a little bit about him. Zach Manns is a senior analyst at EliteWaveTrader.net covering U.S. stocks, one of the founding members of the site. Zach became the second EWT analyst after Avi Gilbert. Today, he co-hosts the premium service Stock Waves with Garrett Patton, providing wave analysis on U.S. stocks, and also co-hosts the site's weekly Beginner's Circle webinar for new members. Zach began working in finance as an investment advisor in 2008 and adopted Elliott Wave theory. He continues to push the boundaries on how sentiment drives the perception of fundamentals and how some fundamentals can influence sentiment while focusing on a bottom-up micro approach, filtering through charts and Elliott Wave counts on hundreds of individual stocks. Welcome, Zach. Over to you, Zach. Looking forward.
Thank you, Jody. So as Jody said, Garrett and we run Stock Waves at ElliottWaveTrader.net, and we really do focus on kind of a bottom-up approach of viewing the market as a whole as a collection of individual stocks. But what I wanted to talk to you guys today was actually starting with a bigger view of the broad market and our expectations for what we're calling a last hurrah. And then we'll get down and look at some of the individual sectors that we think support that the most, and then maybe a few individual stocks if we have some time. So without going too nitty gritty into all of the rules and details of Elliott Wave, at a very, very basic approach, Elliott Wave is a framework for looking for price patterns in human sentiment in the markets, or individual stocks or sectors. But we're looking at patterns that show the ebb and flow between fear and greed in the extremes at those levels. And one of the things that I wanted to start with talking about a lot today was fractals. And so what it means by fractal is that within the larger structure, you'll see the same patterns at the smaller degrees manifesting. And then as you zoom out, those same structures at the large structure become part of an even larger structure. So right now, what we have here is a chart that I've enjoyed playing with over the last several years. I took the normal sentiment cycle that I don't know exactly who started with all of the different spots along the way. There's some more simplified versions, but I like this one that, peaks at exuberance, and then you have denial, fear, panic, desperation, capitulation. And then you start heading up and going through despondency, depression, apathy, indifference, reluctance, optimism, excitement, back to exuberance. And I took that slope that started with a move down and then slopes back up, and I put a little Elliott Wave bend in there for our correction. And I just overlaid this with the last major top within the current trend off of the 2009 lows. So this is really kind of going through the cycles of sentiment at the primary wave degree. And that's what we're calling the subwaves off of the 2009 low, with the 2018 top, which really that wasn't the actual top. The actual top was a B wave high inside that, but the 2018 top is the primary wave 3, and then this flat structure for the primary wave 4 bottoming in March of 2020, which was the COVID lows, and then we're in this final primary wave 5 off of that low. But before we go into more detail on this structure, I went ahead and recently have overlaid this at the larger degrees now. So this is the same wave or the cycle of sentiment, but laid out over the 2000 dot-com bubble burst all the way into the financial crisis low of 2008, 2009, which in Elliott wave terms is all part of the same correction. This wasn't a new bull market and a different drop. This was just the A, B, and the C wave of a much wider flat. And then the entire move off of 2008, 2009 lows as that 1, 2, 3, 4, 5 waves up at primary degree that we were talking about before, getting that cycle of sentiment for that entire move there. And the nice thing about this is I think that these spots, particularly in this larger view, line up very, very nicely with some of the consolidations or tops or bottoms along the way inside that move. So capitulation obviously seems like that's the spike, that's the big drop and final end where we've exhausted the selling and you get a long reversal. Then I move despondency over here. Instead of it being somewhere along the way in this initial move off the low, that's where you've got this big move off the low. Not everybody thinks that that's the start of a new bull market. And so you start to get a retrace, and that's where you get some of that despondency. And then the depression is, yeah, we're hugely up off the lows, but we're getting this pullback as a wave 2 inside that 3. So everybody's depressed again. Then the apathy comes in where you've broken over some of those previous highs, but still nobody believes that you're really in a new long-term bull market. Then indifference, you've made new all-time highs, but people still don't trust this, that it can get legs and continue. Reluctance, okay, finally, this is a new bull market, a new secular bull market. And that's just around the time that things get a little bit choppy and rough. And then squeezing in the optimism and excitement was this, COVID rally. And then the top in January, I think might have been peak excitement within this cycle. But we're not yet quite at the exuberance levels, even though things did get a little bit crazy into the end of 2021 and the beginning of 2022 before the most recent sell-off. But we don't think that that was a serious market peak. We think that things are going to get even crazier to come. And then I did this at an even larger degree. And this is what I wanted to talk about briefly as far as fractals before we move on to going back down and looking at the more specific structure for this last hurrah, is that, my chart, I actually want to switch here to Garrett's chart of that switched over just fine. Everybody can see that. Great. I hope so. So this is Garrett's chart going all the way back to this low in 1857 during the Civil War, which is according to research that was done prior to us being involved with Elliott wave, was a larger grand super cycle degree, wave 1 and wave 2, into that low in the Civil War in 1857. And that was really basically from the start of the New York Stock Exchange in the 1700s all the way up, and then creating that market low in 1857. And then from there, you have a large super cycle degree, wave 1, into the peaks of 1929, the roaring 20s. And then the big drop is the Great Depression in the 1930s, was really that bottom of the super cycle wave 2. So the entire move up since the 1930s has all been this super cycle degree wave 2 inside of that larger grand super cycle degree wave 3 that started in 1857, which should have, as we said, it's fractal in nature. So inside that larger third wave, we should have 1, 2, 3, 4, and 5 waves up. And based on our Elliott wave count that we've been working on, and counting the cycle degree consolidation inside this super cycle 3 as the 2000 tech bubble all the way into the 2008 to 2009 lows, we're still finishing up this cycle degree wave 5 inside of that super cycle third. And that's going to yield a correction at some point in the next, probably 12, 18 months to maybe stretching out, depending on extensions to maybe 2 years or more from now before it starts, but a consolidation matching in degree, not necessarily in magnitude, to the Great Depression. So that's why we're calling this the last hurrah, because we do think that there's a tremendous additional run in the bull market that we're going to see over the next year or two. But then things could get pretty rocky. One thing that I want to talk about before we go back to looking at the more nuanced wave structure off of 2009 again is one of the guidelines for fourth waves for the consolidation for a fourth wave in Elliott wave is that you're going to have alternation in some manner with the corresponding wave two. So we know how deep the Great Depression drop was. We know it was a roughly 70 or I think 80%, depending on how you calculate, drawdown in the market till you got to the 1930 lows. It was also a very, very quick, sharp move. So there are a couple different ways that moves can alternate, can fit the definition of alternation. One of them is in magnitude or severity, but one of them also is in terms of structure and time are two other possibilities. So instead of having a very, very sharp drop where the A, B, C inside that wave two is barely noticeable, we think that there's a very good chance that the structure for this super cycle wave four is going to be a wider flat structure. So it's going to have much similar to what we saw 2000 to 2008, but just 1 degree larger in magnitude, and possibly making a B wave high as well. So now let's go back to our larger degree count here, our larger degree chart. And so we can see that structure in a little bit more detail. Then zooming back into this, to the weekly chart. So this is highlighting those 5 waves. And we know, again, it's fractal in nature. So we know that we should see a clear 5-wave move completing the circle wave 5, that primary wave 5. So we have a higher high over this 3. So at the primary degree, we really have accomplished our objective. And at the cycle degree, we're clearly over the top of the cycle degree wave 3, and we can count 5 waves up in that. So at that degree, we have accomplished our objectives. We've certainly hit all of the targets for this super cycle degree wave 3. But when we zoom back in to our structure off of the 2020 low, a lot of charts and certainly a lot of sectors argue very strongly that we still have more of a 5th wave to complete that circle wave 5. So the fractal inside of that circle primary degree wave 5 should be 1, 2, 3, 4, 5 waves up at intermediate degree. And that's denoted with parentheses around the Arabic numerals instead of a circle around them. So we can count 5 waves inside of that 3rd. We can count 5 waves at the minor degree inside of that wave 1. And we should see 5 waves up inside of that primary degree wave, inside of that parentheses wave 5 of primary degree wave 5, completing sometime off in late 2023, maybe even stretching into 2024 if we get further extension. Any questions about that before I move on? We can always come back to it if there are questions later, but we'll try and keep moving and leave time for questions at the end. I just don't, if it's relevant, I don't want to leave anybody completely behind.
Okay, I have a question.
Yes, Jody.
You've called this the end of wave 4. Now we just heard Dale, I guess his view is a little bit different. His count is a little bit different. I mean, he's looking as this is an A down and then a B up and another C down before moving higher. If we take out that, yeah, and then I guess wave 4 would move over. Do you think that we have seen the bottom of wave 4?
I do. I think that certainly for most, I mean, there are some charts that Garrett and I see some sectors that are a little bit more at risk of having topped in all of the primary wave 5. The NASDAQ can count more clearly as though this is all of the primary wave 5. But in terms of the S&P, the NYSE, and certainly the Russell and the Dow, if we break this, and definitely in the Nasdaq, if we break the June lows, it's too deep to be a fourth. So it doesn't necessarily mean that it is the start of the big bearish move. There are some things that, you know, could allow for a low down here, but they're not, certainly wouldn't be reliable in our view as a fourth wave. This was already pushing the limits. The extension down to the lower low in July was really pushing the limits as far as a fourth wave is concerned, and certainly in an impulsive structure, and even on some things as diagonal. So, you know, the way that we're viewing a lot of sector charts and a lot of individual names, if the June lows break, there's much bigger problems that we would see. So we're giving this the benefit of the doubt. We're looking for 5 waves up as wave 1. We don't quite have that yet. We should probably get a 4th and a 5th wave up, and we can look at that in a little bit more detail. But since I mentioned it, I will bring up the NASDAQ chart. The NASDAQ, different from the S&P, had a substantially higher low in 2008 than it did in 2002. And it counts more as 5 waves up instead of a B wave and a wider flat. It doesn't have the same history because the NASDAQ didn't start when as far back as the Dow and the S&P go. But looking at just the NASDAQ itself off of that 2002 low, while we could count our primary wave 5 complete here, that would only be topping a cycle degree wave 3 off of that 2002 low. So this could be an A wave. We can be working on a B wave bounce inside of a larger consolidation. In the NASDAQ, I'd be counting that as the cycle degree wave 4, and then looking for a 5th wave up to higher highs there before a much larger magnitude correction were to unfold in the NASDAQ.
Great, thank you.
My pleasure. All right, let me get back over to S&P, and I think find my clean tabs. I keep switching to different scratch pads, and things get messy, and then have to start a new one. So this is zooming in just on the structure that we have off of the June low. So far, we have 3 waves up. I think it counts best as a leading diagonal, where this is an ABC move for the 3rd. So that allows for a little bit of a deeper wave 4 than we might normally get in an impulse, but it doesn't necessarily have to overlap. Garrett and I have observed in the hundreds of stocks that we look at regularly, non-overlapping diagonal structures where all of the subwaves fit the rules for Elliott wave for being in a diagonal, and you do get the normal fib extensions for diagonals in the deeper wave 4, but it doesn't always actually overlap with the top of wave 1, which is more of what we consider an allowance as opposed to requirement. So then this fills out, we would get a 5th wave up, then hold on to a wave 2 consolidation, and then get the rest of that 3, 4, and wave 5 on out into at least late 2023. In this chart, I tend to try and stretch out the moves that I show, because I would rather move things to the left when they happen sooner than have to keep moving things out to the right because they drag on longer than anticipated. So that is the look at the magnitude there, and then we can go into even further detail off of that June low, looking at a 30-minute chart, looking for ideally that 4th wave consolidation, and then an ABC move up for our 5th wave, and then our larger ABC retrace back as the wave 2, probably sometime into late September or October. And then from there, that would be a phenomenal entry opportunity, you know, of getting 5 waves up and a 3-wave retrace into fib support to confirm a major reversal off of this low, whether you agree with the count that it's the intermediate degree wave 5 of the primary wave 5 of the cycle wave 5 of the super cycle wave 3, you know, really doesn't matter. That you have a big drop of, you know, that we got into the June low, and a clear 5 up, 3 waves down. You can just play that as far as it goes. But what I did want to get to is that in terms of our cycle of sentiment, you know, looking at this as 5 waves up from 1930, 1930s completing, then we are basically at we'll be at 4 different levels. And really, if you count the minor degree wave 5 here, that subwave, you could say 5 different levels of exuberance. So I'm not super set on a specific level for the top. Right now, I'm very happy to look for the rest of wave 1 and wave 2 and give ourselves our normal fib extensions that we'd look for that third wave, and look for a top somewhere in the 5,500 to 6,000 region would be pretty normal. But because of that confluence of, you have a 5th wave at the minor degree, so that's exuberance. You have a 5th wave at the intermediate degree, so that's exuberance. You have a 5th wave at the primary degree, so that's a level of exuberance. You have a 5th wave at the cycle degree, which is off of the 2008 low. And so you have that level of exuberance. So the potential for some things to get even crazier extensions and valuations than what we've already seen is certainly there. And so we are trying to keep our heads and look at things as being, the end, really as the last hurrah. And so not get swept up in all of that exuberance and emotion, but recognizing how extended and extreme all of those sentiments can be, and really maybe drag this on up, similar to what we've seen in other, crazy extensions. I don't think anybody that was looking at this as the start of the intermediate degree wave 5 of primary wave 5 of 3 from the early 90s really saw the extension that we got into the extremes in the tech bubble. So we're certainly open to seeing that again, but we'll try and continue to look at things from a step back, so that we don't get swept up into that emotion ourselves. So one of the things that we think can help fuel that is even more of a crypto bubble, and we'll look at a few of those crypto charts. But for the most part, wanted to switch gears now and take a look at some of those sectors, some of the other sectors that we think are very, very good drivers for that further extension. Starting with XLK. Again, very similar to the NASDAQ here, where there is a risk of this having been all of that cycle degree wave 3, but held a much better relative fib than the NASDAQ itself for this 4th wave. The subwaves work well here for just being intermediate 3 of the primary wave 5. Off the low, it's looking very strong. Same looking for that 4-5 of wave 1 and then a wave 2 consolidation. Going to continue to give that the benefit of the doubt, and looking for a nice move up towards the 200s over the same course of that intermediate degree wave 5. Next, we have our XLY chart. We zoom out here on XLY. Again, a little bit deeper than ideal for the 4th wave, but still giving it the benefit of the doubt. It looks really, really good off of the low in the same underlying subwave count for our leading diagonal for this wave 1, and fits very, very nicely. A lot of the names in this sector did not get as extreme of a low for their wave 4. They held much more decent fib levels and look good for the rest of that intermediate degree wave 5 of primary wave 5 up towards the 250s once they complete that wave 2 consolidation after we get our 4-5 of the move off of those lows. Clean that up just a little bit. The other one that we like a lot is the industrials, XLI. And XLI counts a little bit different than the broad market. It looks much more like the larger structure from 2008 is a diagonal. And while it did make a higher high in November for over the primary degree wave 3, that could have been all of that primary wave 5. A lot of the holdings that we see in XLI look like an A wave and a B wave inside a larger structure off of that low. And this fits very well as being the A and the B of a larger primary wave 5 in that diagonal structure. So again, when we zoom in here, we can either count this as 1, 2, 3, needing a fourth and a fifth of wave 1, or we can allow this just to count as a diagonal and be an A and a B wave of an A in that purple wave 5. But again, lining up with the market, we would really prefer to see this fourth and a fifth of that wave 1, and then a normal wave 2 retrace once that is complete, and setting up a bigger long-term swing move over at least 12 months or so. Next, different structure again than the broad market, but the aerospace ITA has a slightly different diagonal structure than what we were looking at on XLI, but also its primary wave 5 is filling out as an ending diagonal. So the low that it hit in June is the 50% retrace of a B wave inside its intermediate degree wave 3. So this has, not only does it look like instead of being a fifth wave up off of the June low, it can fill out 5 waves up as the C wave of 3. So similar magnitude and similar subwave structure underlying that can sync up with the market. But from there, it looks like it should hold another fourth and get another fifth wave up that can stretch its bullish move out several months further, even maybe after the regular market has topped. Then another area that we like a lot is the semiconductors. And again, like the NASDAQ, you do have to consider the fact that because of how deep the fourth wave came, that it is possible that this was the top of the wave 5 and we're only getting a larger B wave bounce. But giving this the benefit of the doubt off of the low, we can already count 5 waves up. So instead of a fourth and a fifth wave, we could just move our wave 3 to this nominal higher high and look for a better fourth and a fifth of wave 1, more in line with the regular market. But it is possible that the semiconductor sector is running ahead. A lot of the individual names in the semiconductors that we like a lot held much higher relative wave 4s than what the index itself got. And some of these can even be a smaller degree wave 1 and wave 2 inside an even larger wave 1 for a much more extended move. So these are some of the moves off the low that we were a little bit more concerned about, that deeper drop into May, June, and July lows from the chart here, because this looked like it was at risk of this ABC flat, looking for a bigger drop down. But a lot of those names were some of the names that we rode off of those July lows and did very, very well on. All right, let's take a look at a couple of those individual names that we would like to highlight. While we're on semiconductors, let's go ahead and start with AMD. So like I was saying, with regard to the SMH chart, or the semiconductor index, a lot of times we covered the actual index or the futures. For some of the ETFs, we try, and instead of just looking at the sector, we try and just look at the more tradable ETF. And for most of them, we chose the spiders. So again, that the structure off the low, a little bit ambiguous, where this could be 5 waves up already for that smaller wave 1 in green, getting an even bigger wave 1 of 5. But the important thing that I wanted to highlight here is how much higher of a fourth wave at the intermediate, that parentheses wave 4, that AMD held relative to the SOX or the SMH chart. And it also fits inside a larger structure a little bit better, where its primary wave 3 started back here in 2018. And this, instead of being the 5th wave of a primary wave 5, is the 5th wave of a primary wave 3 still. And so we have other markers and other guidelines using Avi Gilbert's Fibonacci pinball for the subwave structure inside this primary degree wave 3 that puts a larger 350 target for that 1618 extension of a nice confluence level for that intermediate 5 of primary wave 3 that makes AMD one of the strongest names that we like a lot. Another name that we think has tremendous potential for being one of the main drivers in this coming rally is Tesla. Tesla can count the same way. I keep shifting back and forth in terms of my subwaves inside of wave 1 of which way counts better at that smaller degree. You know, one of the things that I think Elliott wave gets criticized for is having different ways of counting the same move. And if you think of things more in terms of the fractals that we discussed, that you can have a very, very strong idea of what this should be doing at the larger degree. So we know that there is a high probability that Tesla is starting this primary degree wave 5 off of its May and June lows of a cycle degree wave 3 that has tremendous confluence in the 3,800 to 4,300 region, which seems absurd, but it's less percent return overall than it got in some of the other moves inside of that cycle degree wave 3 that started way back here in 2019. And just normal Fibonacci pinballs. So our primary degree wave 3 in January topped just shy of the 1236 extension. So the primary wave 5 of the cycle 3 getting closer to the 1618 would be perfectly normal. Based on the size of the movement that we have off the low, if we get a 4th and a 5th wave up for wave 1 into the 1100 region and then hold a normal retrace of wave 2, it doesn't take such outlandish fib extension to get us up towards that 3,500 to 3,800 target region and maybe even extending up to 4,300 itself. Going back to looking at those subwaves off the low, again, similar to the diagonal that we're looking at in the market, this can be an ABC move up for the 3rd, can get a little bit of a wider, deeper 4th wave, then a 5th wave up, and then our wave 2. Or Tesla does allow for this to be getting one more high as the 3rd of the 3rd in an impulse and holding a 4th, getting a 5th wave up for that 3rd, getting another 4th, and then a 5th wave up. And that might push that wave 1 a little bit higher than the 1100 region that we should see if this is the diagonal filling out for the 4th wave. Another name that we do like a lot for that intermediate degree wave 5 higher is Amazon. That is similar to AMD. Its intermediate degree wave 5, instead of completing a primary wave 5 like we're looking at in the broad market, looks like it will only be completing a primary degree wave 3 for Amazon. But again, when we look at that structure off the low, and pardon my Amazon chart, there was a split recently, so I have to zoom in a little bit more. I can only see the smaller degree, and then I can see the much larger degree. But again, off of that June low, we have our ABC structure for the wave 1, an ABC structure for wave 3. We're looking for a 4th, and then an ABC 5th wave, and then the bigger ABC for a wave 2 retrace to really set up and confirm that bottom. But so far off the low, looking very, very strong. You could, I mean, one could argue that this isn't just an A, B, and a C wave up at this point, but we think that it fits the subwave structure better as 1, 2, and 3 of a diagonal. And it's one of the charts where it is even more pronounced in that structure, which makes it more reliable as a diagonal than some of the more bearish views that we've seen, where this is part of just a corrective bounce and the bull market's over and we're going to drop down under support and start heading down to see new lows. As we looked at on the NASDAQ, even if this is part of a bigger corrective bounce, which I have this faint yellow B wave note here, this would still likely be just the A wave of that B wave. And so maybe instead of a 4th wave, a B wave of that B could drop a little bit deeper, but would still be an ABC corrective structure. and then would get a 5-wave move up towards those 165, 170 regions. One other area before we pause and leave it open for Jody to relay some questions. Garrett and I just did, every Thursday we do a webinar where, in addition to taking a lot of requests, we start the webinar with looking at a particular sector and then drilling down and looking at a lot of the component holdings of that sector. And one of the things that we looked at recently was the IPO ETF. And this is probably one of the greatest additions to Elliott, the world of Elliott Wave, that we think Stockwaves has made. And that was the observation that Garrett and I saw of the IPOs displaying a very, very similar pattern. And a lot of that is that after an initial move higher, I'm trying to pull up, let me see, a good one to use as an example. We just use open. After an initial move higher from when they start trading on the exchange, a lot of times those IPOs will fill out a very, very large ABC retrace to at least 50% of a haircut from where they initially started trading on the exchange, not the actual IPO price. And so we've been observing this with alarming frequency. I published an article in cooperation with Avi Gilbert a number of years ago, and then we did a couple of updates to that article where we talked about this pattern. We call it the CAB PIPO pattern, the Cowabunga post-IPO pattern. And what we've noticed is a lot of these IPOs that IPO'd sometime in late 2020 or early 2021 have completed this larger ABC structure and can be setting up for the starts of much bigger bullish moves off of all-time lows. And there are a couple of really cool charts that we looked at recently. And then other things that maybe did this IPO pattern and bottomed in 2020, and off of that low have completed a larger wave 1 and wave 2. As we said, we don't like to place too much emphasis in Stockwaves right now on those larger 1-2 charts because we are, as we talked about, looking at the tail end of exuberance. And it seems a little bit imprudent to start looking for even bigger bullish moves to unfold that could be lasting multi-decades from larger 5s up and 3s down, when most things look like they should be filling out 5 waves up to a primary wave 5 and then starting a bigger consolidation. So we're treating a lot of these charts with grains of salt, but there are some things that have a much bigger decline into the June or July lows. But that could be something even more long-term bullish. And so with those quadruple exuberance in mind, there are a couple of charts that we're looking at the potential that they could be setting up for much bigger bullish swings. Here's Roblox, for example, made a higher high as the B wave, 5 waves down for that C wave, and then off of the low is filling out nicely as 3 waves up so far, looking for that 4th and the 5th wave, very similar to our market. And then this 5 waves up, assuming it could hold a wave 2 retrace, could be the start of a brand new long-term bullish move on a lot of these IPO names. So again, treating them with a grain of salt, we're going to be in a healthy dose of skepticism, but a lot of great potential there. All right. Jody, you got any questions for me?
Okay. Well, the last somebody's asking if you could do Bitcoin or Ethereum as well. You don't
I was going to talk about some of the crypto related things.
Okay.
Ryan Wilday runs the crypto service at Elliott Wave Trader and also a mirror of the service at Seeking Alpha. So I really defer to him when it comes to counting the actual cryptocurrencies themselves. But the crypto related stocks, which some of them are miners, some of them are just other crypto related enterprises like Coin. This is Mara, that we like a lot, that has a very nice, looks like 5 waves up complete already off of the July low, June-July low. And that low was a 50% retrace of the move up from this. This also looks like it got, could have counted as that Cowabunga IPO. But from its March 2020 low, we can count 5 waves up. We can allow that to be a primary degree wave 1 and an ABC retrace to a 50% fib as a primary degree wave 2. And so far filling out proportionately in line with what we would expect for wave 1 of a possible primary wave 3 starting. So this is one area that we do think that could just take off and soar and be, hitting some really crazy extremes of sentiment in terms of that quadruple exuberance.
Okay, great. And somebody else is asking if you can say something about commodities.
We are bullish on the precious metals. It's actually not too, they've kind of aligned themselves pretty well in some respects with the market. They're getting a wave 1 off of the low. I think that gold can easily count as 5 waves up complete, although it does allow for this being a 4th wave and getting one more high up closer to the 1850s and then a wave 2 retrace. Ideally, that is going to just be the intermediate degree wave 1 of a much larger primary degree 5 starting. And that fits better with what we see in the mining stocks. Similar count in copper and silver as well, although silver is not a wave 4 here. Silver could potentially be a larger primary degree 1 wave 2 as well. And I think that also shows up when we look at the gold and silver ratio. Oops, that's not it. There we go. That we can continue to see some outperformance from silver in the longer term. I mean, this move can continue to head higher. It doesn't have to fill out the rest of the B wave, but we can get a pretty decent drop coming soon where silver greatly outperforms gold in terms of their relative value. And then looking at copper again, smaller degree. So this is an intermediate degree wave 4 instead of a primary wave 4 that we are counting in gold, but nice 5 waves up off the low, looking for more of a wave 2 retrace. And that proportionally fits very well as being the first wave 1 in the 5 wave up fractal inside wave 1 of that larger 5th starting.
Great. Okay, there were some questions going back to the S&P. Okay. So are you considering the 5th wave SPY starting from March of 2020 as an expanding ending diagonal? So some clarification.
There are a lot of charts that we have shifted where either this is ABC up for wave 1, and then this is ABC for wave 3, and the deeper wave 4 is the 4th of a diagonal. And yeah, it could count as expanding because whether you count this is wave 2 or this is the intermediate wave 2, they're both so small that your trend lines can't help but expand. And that fits nicely with the fib fans also. And the only difference there, and there's a lot of charts that we looked at where they should be getting an A, B, C move up for the 5th wave and not as extended of a 5th. But we are open to those just morphing back into a standard impulse for the move up. But if that's the case, I mean, there are some things that look much more clearly like an ABC up, whether that's the A wave of the 5th or whether that's wave 1 of an ending diagonal for some of the things that are C waves of 3rds. And then there are even some charts that we look at where the entire move, they didn't get nearly as high, and they look more like a wave 1 of a bigger diagonal topped here and a big flat consolidation for a wave two. Some of the airlines can even, or travel stocks can even count that way. Here's Booking. So Booking did get a higher high over its cycle degree wave three in what could count as a much more muted cycle degree wave five, but it looks very much like a lot of other travel stocks where this can be wave one of an ending diagonal, a WXY consolidation to a 50% retrace for wave two, and this cycle wave five can get a lot more extension. And so this move off the low easily fits within what we would expect is just an A wave of the A wave. I use color coding not to denote alternative counts. I try to keep a lot of alternate stuff off of my charts and only put one single note there when I feel that it's absolutely necessary. But I do use color a lot of times as a color coding to try and denote and emphasize different structures. So I'll use green subwaves when I'm trying to highlight that the subwave path is a more aggressive impulse inside of a larger move. And then the waves that are the degree waves that are already a little bit more set in stone and don't have as much room for the variability, then I'll keep those in white. And that's saying, I know this is a fifth wave. I know it's a fifth wave that should be targeting up here. Here's a path for that fifth wave that I'm highlighting it as. Here I'm using purple on Booking because I've done that the same to emphasize its similarity with a lot of other travel charts that I've posted, travel stocks, where this can be a larger wave one and wave two of a bigger diagonal that stretches out longer in time.
Great. And then somebody is basically asking about the wave count of a diagonal with the ABC. So maybe you can just clarify. He's saying, I don't understand the ABC move up for a fifth wave is an ABC corrective.
So in a diagonal, so we know that LA waves are fractals. So a fifth wave is always going to be, should always be 5 moves, but a fifth wave could also be a diagonal. And where, so you have 5 waves inside of this fifth. That's the primary purple 1, 2, 3, 4, 5. And all of the subwaves inside of that structure, instead of having 5 waves up for your wave 1, and then 3 waves for the wave 2, and 5 waves for the 3, and then 3 waves for the 4, and then 5 waves for the 5th, every single subwave is a 3-wave move, either an ABC. This is a little bit less common of a WXY, but then the third is also an ABC move. We have some really good, there's a good webinar that's devoted specifically to diagonal structures that Garrett has done on available in the free education section at elliottwavetrader.net. So certainly encourage you to check it out. I happen to like diagonal structures a lot more than a lot of other people. Usually they tend to be choppy and overlapping, which can be very, very frustrating if you are looking for something to be a long-term trending impulse. But if you are attuned to that potential for a lot of back and forth, it presents a lot more linear travel in terms of entries and exits for trading opportunities.
Yeah, I would agree with you. I love diagonals as well. Okay, somebody is asking for you to take a look at Apple and DKNG. DraftKings.
I typed in the right ticker for Apple. Apple's kind of in between Amazon and a few of the other tech names. It has a lot more history than some of the other tech names that came around in the 90s. And so it looks like it is completing a super cycle wave 3 of its own. And in the cycle wave 5 of that started back here, 2-day chart where we can see, seems kind of small, but we have that 2013 decline. It was to the low was a almost a 45% decline. So even though it looks really small in the chart, At the time, that was a very, very big magnitude move as the cycle wave 4. And then off of that, we have this very long-term ending diagonal that we're in the 5th wave of that, which the subwave structure is easily all of the A wave already. And we know that one of the difficulties that diagonals have for a lot of people is that you're dealing with corrective structures for all of the subwaves. And one of those complicated things is that A waves are sometimes ABC moves and sometimes they're 5-wave moves. So here we have the subwave structure. We could get a 4th and a 5th wave up nominally higher for the A wave, but this is easily all of the A as an ABC move up is only 3 waves. So 1, 2, 3 could just as easily be ABC, and that's all of our A complete. And then instead of this being the 4th and getting a 5th and then a B wave, this could just be the B wave here. Like some of the other NASDAQ and tech charts, we've given this the potential of topping in a B wave of a larger primary wave 4. It really would make the trend lines for the diagonal expand a lot. And if Apple were to do this, it would probably break a lot of other things in the market that would not be able to recover. So if we're looking for a move down here, I'm fading Apple at the moment. If that turns into 5 waves down or a sharper drop than a clear ABC retrace, whether that is the 4th or whether that's the parentheses B, then I'm going to get a lot more defensive on any corrective bounce from that because it could be heading a lot lower. But as long as this is reluctant to even drop at all and we get a clear corrective retrace holding support, then pedal to the metal bullish. Let's keep going. I'm going to add that that this could be all of the B wave. And then DraftKings. DraftKings could just be one of those larger. I mean, it's in between. It never, because of when it IPO'd, it never got that larger retrace. It's potentially one of the exceptions to that IPO rule. It got this massive 5-wave up move, but it didn't hold reliable fib support on the ABC retrace. Maybe we could have given it one extension down to the 764, but this invalidated this as 5 waves up and 3 waves down. That said, maybe this was just the larger ABC drop that it never got before, and it didn't retrace 50% of where it came on the exchange, but it did at least get nominally below that. And so off of that May low for DraftKings, we can see a similar diagonal structure that is in need of the 4th and the 5th wave up. And then once we get an ABC retrace from that, it's good to go.
That's great. Okay, just another, is it possible to look at another minor, CLSK or HUT?
I think I like HUT. I don't know if it's HUT or right. I think I like HUT more than CLSK. The structure on CLSK is just not very favorable. So I think there's more data on the Canadian version where this could be a larger 5 up and 3 waves down, similar to what we were looking at on Mara. So this would be the measured move for that. So filling out nicely, this needs, Mara looks like it already has 5 waves up. This looks more like other things in the market where it needs a 4th and a 5th wave. And that can be the wave 1 and wave 2 of this larger potential measured move. So really, really good risk reward in these, but even though the risk reward for where we think they can possibly go is great, even if we get, say we stop at 464 for the 5th wave of wave 1, we pull back as a nice ABC into ideal fib support around 270s for the wave 2. Even though that's phenomenal risk reward, you're still looking at a risk of 50% or greater drawdown before that pattern would invalidate. So the potential is there, but you have to play these with smaller amounts of risk capital because they are just so volatile.
That's great. Okay, Zach, I really appreciated your presentation today. And Zach is offering 2 free weeks of Elliott Wave Trader stock waves, and I posted the link in the chat. It's elliottwavetrader.net/stock waves. We are also going to post all of the presenters' offer on a website. We will email you that website and also post the recordings on there. So
Thank you so much, Jody.
thank you. This has been terrific.